Morning. I'm with Daniel Earle of Highlander Silver. It's Daniel's first time on Goldfinger Capital. So, hey, Daniel, how are you this morning?
I'm very well, thank you.
So, Highlander Silver is relatively new story to me. I first became aware of it earlier in 2025, and then we met at Beaver Creek. It's been quite a year for the company. So, I kind of want to start going back in time, Daniel, with when you got involved with the company, I guess, towards the end of last year, and sort of how the company got started.
Yeah, absolutely. Yeah, it's kind of one of these stories. I mean, we started introducing it to investors in January, so it seems like it's kind of relatively new. But in reality, there's years of hard work that go into getting to the point where you're ready to introduce it to investors. And so, the beginning of the story really starts with the concept of putting on meaningful position through the creation of a company, to provide exposure to, at the time it was a concept, but I think now a reality that most people recognize, a structural bull market in the future in silver. And, so that goes all the way back to 2021 with that concept. And really like the genesis of the company, it begins with a conversation with the Lundins, and it's basically just laying out the thesis, that I had on silver of that bull market to come, which is basically, I mean, I don't need to explain to, your listeners what the fundamentals of the precious metal markets are, and silver is an important part of that. But then you've got the overlay of secular demand driver that comes through in silver, and you see in a big way in the silver demand uptake into solar, which has something like 2 decades of a 10% CAGR behind it, and you can extrapolate that out to the future. And then other electrical properties. It's actually a better conductor. I came from a copper company, and talking about electrification, and that being a secular demand trend. Silver is actually a better electrical conductor than copper is. And so because it's at a higher price point, it's got more specialized applications. But I think a lot of your listeners would understand, in some of the trends that we're seeing in the economy around AI, and kind of a build out in these specialized sort of technology areas, that silver has a role in that as well. And so basically you've got what I think is the makings of a very powerful, fundamentally supported structural bull market, which is going to be with us for some time. So a much more durable market, than we've seen before in silver. And that's something very, very special, that we wanted to position ourselves for. And so that was basically the thesis. And, and we presented that to the Lundins. I've had a relationship with Harry Lundin, the eldest brother, that goes back, a long time. Adam Lundin to an extent as well, and then through the conversation with them, met Jack Lundin, and eventually Will Lundin also became investors in the company. But basically presented that thesis to them, and the pitch was, look, we're bullish about this outlook for silver. We need to put on some meaningful exposure here. If you buy into that thesis, then you'll be of the same mind. Let's pool our capital, our network, mind share, and go out and create something really special in silver. And the flagship asset here, San Luis, is absolutely a one of a kind asset. And so we very quickly zeroed in on this asset. It was, again, years of work in dialogue with SSR before we eventually made a breakthrough and were able to acquire the property. That was in 2023. And we closed that acquisition in 2024 with the support of the Lundins, and then Eric Sprott came in at that time and provided some important funding. And then really from that point, it was a matter of, maturing the opportunity, in terms of the regulatory and the social permitting to be able to restart activities. We completed that towards the end of 2024. And then that positioned us, in early 2025 to come in as a management team and begin the process of introducing it to investors. So again, it looks like a new company, a startup that launches this year. In reality, you've got years of work behind that to get to the point, where you can launch the company as a public company.
Yeah, I appreciate that, and I think that's very helpful to our viewers here to understand that these deals, these assets don't come into a pubco overnight. There's years of groundwork and foundational work that has to be done, in order to get them ready for public market consumption, and to be able to raise the kind of capital that is required to advance a world-class asset forward to a resource, and like an economic study, and then into permitting. So it's interesting. So you basically said, hold on, at some point in 2022 or 2023, you said, like, silver is where I want to be over the next 5-10 years. And then you found the asset, essentially. You're like, okay, how do I maximize my exposure to silver? And then you found this asset. Is that right?
Yeah, I mean, you're being generous when you say find, like this is sort of a, hidden asset or something like that. This is a reasonably well-known asset. It's just, an exceptional asset in terms of the grade profile that it offers. But then also, for people who are familiar with the asset, familiar with the industry, there's a recognition that there's tremendous exploration potential on this property package as well. And basically, it's a large property package, covers some very, very special geology in the Cordillera Negra in Peru, which is famous for, the Pierina deposit, which was a discovery of David Lowell in the middle 90s. And so it's not an unknown asset. It's quite the opposite. And so, really the trick was, being able to lock in on the asset early, and then being persistent over, it was a period of 3 years in dialogue before eventually making that breakthrough and being able to actually transact on the asset. And none of that is possible in a bull market. Those are the kinds of deals that can only get done, in the depths of a pretty difficult market at the time, if you remember. In 2020.
Oh, I remember.
Right.
So that was 3 years ago that you basically closed on the asset.
Yeah, that's right. 2023 is when we were able to get the deal done, and it wasn't anything special that we did on our end. It was more on the vendor side, and just the way that they were positioned as kind of one of the leading mid-tier companies, with ambitions to become a large cap company, and so as a result of their internal decision making around aligning and optimizing their portfolio for the strategy ambitions that they had, that meant that any asset under 250,000 ounces of production potential per annum, so like, classic definition for like a global scale asset, for them became expendable. And so it was a decision on their end that then created the opening for us to get a deal done to acquire the asset. And we were able to do that in a matter of weeks from that point.
That's very interesting. So I've heard this similar story many times previously with majors, and even the mid tiers. An asset just no longer checks their size or scale box in terms of what they want to grow to, and then they're willing to divest it. But they realize it's a very high quality asset, but it's their corporate strategy changes. And that's interesting, because 250,000 gold equivalent ounces per year, that's a pretty big mine. I mean, that's not small.
Yeah, absolutely. And look, I think, investors make the mistake of looking at these, transactions that, between majors and juniors, with the kind of hindsight analysis of, if the junior is successful, then the major has, done a bad deal, or they've given away upside. That's not the reality. In my experience, parties are looking for, and what makes a successful deal is where it's a win-win. Where you're undertaking a transaction that accomplishes the goals of each side. And for an asset like this is an asset that's much better aligned with a company like ours and a team like ours with the experience that we have, the scale that we have, and the ambitions that we have to grow as a silver company in the silver sector, than it was in the portfolio of, a mid-tier going on major, with the ambitions that they had, the ability to allocate resources, or the need to allocate resources to those larger opportunities that they really have to be successful in that strategy. And so this is a classic win-win transaction. Some people focus on, we could talk about what the deal actually was. Some people focus on, the cash payments, associated with the transaction. Cash payments total a little over $40 million US. Most of them tied to milestones, and anniversaries of production. So back end weighted. Obviously it's a friendly deal. It's a low dollar number, and then friendly in terms of the timing of those payments for the junior party. But really, from the vendor side, they're taking a long view of things, and most of their consideration is coming in around the royalty. So they've got in addition to those payments, they've got a 4% royalty, of which we can buy back half of that royalty, so 2% of it, for $15 million prior to construction. And they're looking at that and thinking, that's really where most of the value, by far, is going to come from. If this junior, being Highlander Silver, is successful in surfacing, the potential that we see on this property package and is pretty widely recognized, then that royalty is going to be worth much more than those cash payments. And so that's the way that they're looking at the deal. I think that's the way that, in industry, some of the more sophisticated, royalty companies out there are looking at it as well. I have a feeling that they've been bid multiple times for that royalty. And I think that that's something that's maybe lost on some of the some of the investors who aren't looking at that big picture out there. So for me, the way that I see this, it was kind of a classic win-win deal. And you're repositioning and realigning an asset with a party that's better able to surface the value opportunity, and it provides a better fit with the strategy that they have.
Yeah, some really excellent points there. I got two follow-up questions there on the deal, and then we can actually go into the San Luis project and Highlander's long-term goals. First question is, was there competition for the asset? Did you have to outbid other parties? How did the process work to actually get the deal done? Was it like an auction process, or did they just go exclusive to your group? That's question number one. And then how long did it actually come to terms on the financial arrangement of the deal?
Look, the deal, as I mentioned, happened in a matter of weeks. And so there was a formal process for, an asset sale would take 6 months, with a phase one, phase two. You've seen a number of examples like that with large assets that have transacted. This was not that process. This is something that came together in weeks. Now, in terms of competition, this is an asset that had sat in their portfolio on care and maintenance for over a decade. And they had been bid or approached on the asset well over a dozen times by senior companies in the silver sector, and then numerous juniors and entrepreneurs, and even Peruvian companies for the asset. And it wasn't for sale until it was. And that was that breakthrough that I talked about. And that's purely because of the internal processes on the other side of the table. Nothing that, no breakthrough in terms or anything like that we catalyzed on our end.
Got it. Okay. So let's actually get into San Luis and the Highlander story. Maybe you can just delve in a little bit, deeper in terms of why this asset was so sought after and what makes it special, Daniel.
Well, I think just as a starting point, if you know nothing other than what the resource is today, you can already see why it's something special. So, so the existing resource, a very high quality resource measured in indicated category, on a well-behaved vein. So basically a vein in its place, drilled at 25-meter centers, outcrops at surface, more or less vertical, drilled down to 250 meters, no drilling below 300 meters, over a strike length of about 550 meters. Excellent rock conditions and so on. So high quality resource in terms of the level of confidence, and then an extraordinary grade. So you've got, 24 grams gold, 580 grams silver. That silver grade in isolation would be something like 50% higher grade than what you would consider to be a reasonable grade in the silver sector. But then obviously it's coming with 24 grams gold, which would be an exceptional grade, again, in isolation in gold. Each of those grades would be top 10, in their respective vertical, and then they're coming together here, obviously, in one resource. So very, very special grade. I think when you really understand the opportunity here, it's when you look at the growth potential. Okay, and that basically, if you do nothing, again, like simple as possible view, just look at what's in outcrop. If you bring this property up on your iPhone and just look at satellite imagery, you can see the number of veins that are in outcrop around that Ayelen vein, which is the resource. There are now, with the mapping work that we've done, a dozen veins in a small area there where you have outcrop. And most of the property here is underneath cover. It's only in these highland areas, these topographic highs, where you have the winds having come through and sort of swept clean the underlying geology and exposed these veins. So most of the property package is underneath cover. We think that there's going to be excellent potential, to find new veins and extend existing veins and vein trends underneath cover. And you can, in fact, if you look along strike and take a broader view of things, you can see where, within this property package and outside of the property package, that there are veins that are at various stages of either exploration or development or even mining that are on trend of these. So, even the lateral laydown of the Ayelen area is already painting the picture that there's going to be multiple times growth. But the key to understand, again, is that's just one area. The area that we're drilling right now at Bonita is another one of these highland areas. This time, instead of a hilltop, it's on a ridgeline where the geology has been swept clean, and you've got outcropping veins along, the ridgeline. And this is about 10 kilometers, down a deep valley and back up the other side underneath cover, where we've got geochem that's suggestive of underlying potential that's never been mapped properly with geophysics, until we're now starting that work as a company with the technological breakthrough of, drone magnetometer surveys. We're able to come and start actually mapping this concealed potential out. But if you look at the drill results that are coming out of the Bonita vein system, we show in our presentation what some of these results look like, and you're basically looking at consistently anywhere from 10, 15 meters to 20, 25 meters. Widest widths would be out to 50 meters of, sort of 3 to 5 grams per ton, with our most recent drill result that we've reported, our last hole, being 23 meters of 15.5 grams per ton gold, with silver associated with that as well. And it's not like we're drilling, directors holes down to 1,000 meters depth to try and come up with, a splashy result, which isn't going to be representative of a mining opportunity, but for decades out into the future. These are 100-meter holes that we're drilling. So we're literally drilling the crest of a ridgeline. That's something that would neatly fit into an eventual, pit shell. So these are just two areas where I think even at a cursory review, you can understand that there's a lot of exploration potential. But this is within a property of over 230 square kilometers. And we're talking purely about low sulfidation vein systems, when we've got everything represented through intermediate sulfidation to some of the porphyry associated mineralization, and then 2 porphyries themselves with potential for replacement mineralization at depth. So there's a full spectrum of opportunities on this property package, and it's really that full view of things that you have to take in to really understand why we're so excited about this.
When was this project first found, Daniel? Was it in the 70s?
So really, you know, a lot of the exploration work in Central Peru focuses on the Cordillera Blanca, okay, where you have, you know, the biggest mine in this region would be the Antamina mine, which is one of the biggest mines in the world, copper polymetallic, run by Glencore, BHP Tech, Sumitomo, and that's in the Cordillera Blanca. This is the Cordillera Negra that we're talking about here, and that really becomes famous with David Lowell's discovery of the Pierina deposit, and you know, and so that occurs in the middle 90s, and you know, that was developed as a mine. You know, it was a 10 million ounce deposit. It's now on closure, but you've got over 8.5 million ounces of production that came out of Pierina. And that was a high sulfidation deposit telescoped on top of porphyry. This is all within the same, you know, geological belt. So here now, you know, our San Luis project is immediately adjacent to the Pierina project. You're talking about the same belt in the Cordillera Negra, you know, same style of mineralization, all related to, you know, volcanism in this belt. But interestingly, over a period of, you know, tens of millions of years, so very long-lived volcanism, when you've got active plate tectonics, that is the kind of geological history that sets up, you know, this very rich endowment of all these different styles of mineralization, very high grades in different settings, you know, up and down the stratigraphic column. So that's really what gives you all the potential. Now, so Pierina is sort of the middle 90s. The discovery here of the Ayelen vein happens in the middle of the 2000s. Okay, and that comes out of a regional, like a truly, you know, belt scale stream sediment sampling program. So trying to identify catchments that are prospective for precious metals, and you know, and the property basically encompasses 3 of these catchments where you've got off the chart stream sediment values that are suggestive that you've got, you know, veins somewhere within that catchment. And basically the discovery at Ayelen is a prospecting discovery up in the highlands above one of those geochem anomalies. And Ayelen is literally sticking out of the ground. You know, as I mentioned, if you look at this property on satellite imagery that you can pull down on your phone, you can see the veins sticking out of the ground. And so it's a walk-up discovery in the middle 2000s. That's basically the beginning of the story of this San Luis property.
Got it. Okay. Thank you. That's good background. So there's 2 porphyries. There's 2 porphyries. They're actually established to be porphyries on the eastern side of the San Luis property. The Colorado one looks a little more interesting, I guess, because you've got some shallower silver, lead, zinc intercepts with some sniffs of copper. Presentation says 2 deeper porphyry holes were drilled at Colorado, and they intersected low-grade porphyry copper. So my question is, you know, just understanding the porphyry, skarn, the CRD, you know, the epithermal setting, you've got all the goodies here. How do you focus? Do you focus primarily just on the high-grade gold silver veins in the western side of the property, or are there some plans to shoot IP or do MT property wide and test some of these, you know, these other targets?
Yeah, absolutely. As you say, you know, you have 2 porphyries there, and we've done age dating so we can see how, and we've also dated all the veins now as well, so that we can see how it fits into the geological history of this part of the belt. So we have that information as well. And I wouldn't say that one is more prospective than the other. It's just that Cerro Colorado is more advanced than Daniela, which is the other porphyry. So Daniela doesn't have any drilling on it, but it's got some very interesting geochem. Cerro Colorado, you've got the 2 deeper holes which test the porphyry. These cut intervals that are, you know, 400 or 500 meters of, I'm going to say roughly 0.15 copper, zero point zero 0.00 X moly, let's say, and single digit values of, silver. So those are sort of mediocre results. The conclusion of the prior exploration team was that the more robust mineralization would be at depth there. What we think is more interesting, because we've come into this area, with much more detailed mapping, using a more sophisticated, more modern sort of approach to mapping porphyry systems. This is similar to what we did. Solaris Resources, was copper exploration company, now development company, focused on the Warintza porphyry cluster in southeastern Ecuador. And so that's where our team has come from. This is a similar approach to what we use there. And so basically going back and doing more detailed mapping work and then sampling work, what we found is that within this large porphyry footprint at Cerro Colorado, so this is 3.5 kilometers by 3 kilometers or so in terms of the color anomaly at surface, the alteration that's visible even in satellite imagery. Within that, and at the south end of it, is something that was mapped as a breccia. And there's some drilling in that area where, you reference splashy base metal values. One of the holes, and this would be the highlight, cut 14 meters of 14% lead zinc, 0.3 copper, 175 grams silver. This would be, in a true breccia. And then there's some polymetallic veins and other things about that have some significant values in them. But one of the areas that was mapped as a breccia, we've actually gone back in and remapped this as basically just being a much tighter porphyry stockwork. And so if you have really intense porphyry stockwork mineralization, sometimes the vein density can be so high that it just looks like a breccia. But it's important to make that distinction. And then when we pair, that mapping work with the geochem, it becomes clear you've got, within the large footprint of Cerro Colorado, you've got a much tighter, we think it's a structurally controlled later stage of porphyry mineralization that extends for significant distance down to the south. And so essentially you have like a cluster of porphyry deposits, but they're sort of inset here at Cerro Colorado. Whereas at Warintza, you had them spread over about a 5 by 3 kilometer area that was eventually expanded upon, but with the known porphyries. And so that's a more interesting porphyry target. We've gotten values out of that at surface, even in weathered material, that are approaching 0.4% copper. And that suggests that in fresh material you might be into some very significant grades there. It doesn't have the same footprint. It's not going to have the same sort of plus billion ton scale profile that you might imagine when you look at something, an alteration system the scale of Cerro Colorado, but it could potentially have much stronger grades. And so that would be more the focus there. And then the related styles of mineralization. One of the things that's really interesting is that this porphyry cluster has come up. Obviously, it's expressed at surface in volcanic rocks, but it's come up and it's cut through carbonates, a significant package of carbonates in the stratigraphic column. And if you take these upwelling hot, base metal rich fluids and then run them up against carbonates, you can really efficiently precipitate out the base metals, and you can make a very special replacement style deposit. And that, within the Augusta group in our history, one of the most famous discoveries was Don Taylor's Taylor discovery in Arizona mining. And it was exactly that sort of a setup where you had in that case, a manto deposit at surface indicating that there was a porphyry at depth that had never been drilled, probably on the view that it would just be too deep to be economic. But the genius was Don Taylor's to figure that that porphyry and the manto at surface suggested that there was replacement style mineralization potential where it cut across carbonates at depth. And that was a discovery on his first set of drilling at about 600 meters depth. which went on to be over 100 million tons under their control. It was bought by South 32 in 2018 for a little over $2 billion Canadian. At last measure, it was over 200 million tons. And then they made a discovery to suggest that there's still significant, growth potential from there. So, it's the tighter porphyry and then the related styles of mineralization that make that Cerro Colorado area, an exciting area for us.
Yeah, that's very exciting. How deep are the carbonate rocks there?
Well, it's a good question. We're going to have to drill to find out. It's going to be more than 600 meters. So we're talking about a deep target. But these types of targets have the potential to give you double-digit base metal values,
Yeah.
Multiple ounces per ton of silver, and good gold values as well. So, so we wouldn't be deterred by the depth. This is a very exciting target. We've just got to complete the work that we're doing and then do the regulatory and the social permitting to facilitate the drilling. That's probably a 2026 event for us, but we're excited about doing that work.
Super exciting, Daniel. Yeah, this is a geological playground at San Luis.
Well,
Incredible.
we've just touched on two of the deposit styles, right? There are a bunch of other areas and different styles of mineralization that are exciting as well. This is what's difficult to convey to people. When you're explaining what the full view of the opportunity set is here on the San Luis project. The only caveat that I put to people is look, this is because of the context. This is a project that's in Peru. There's a very rigorous permitting environment in Peru. It's also in a community context, so we're working with communities. By its nature, that work is going to be incremental. It's going to play out over a period of years. So don't expect us to, we try and be as transparent as possible, so that people understand, we're not going to come in here with 6 drilling rigs or 12 drilling rigs and start putting out a press release every 2 weeks. If this is going to play out over the long term, that's just fine for us. But it is maybe a bit different than what people are used to in some of our prior companies, like Solaris or Arizona Mining, as I mentioned, where we were able to deploy much larger drilling programs, basically within the first year or two of getting started on the project. That's not what this will be, but there is incredible potential, here to be uncovered.
Yeah, I mean, that's the first thing that comes to mind is, why doesn't this have 5, 6, 7 rigs on it right now? And okay, so you just answered that question. So what is the timeline approximately to scale this up from 1 to 2 to 3 rigs over the next couple of years?
Well, look, it depends on which area you're talking about. So for example, in the Bonita area, we've got an existing drilling permit, and then so modifying that permit and kind of expanding incrementally is pretty straightforward. If you're talking about greenfield area, like Cerro Colorado, for example, where we don't have a current drilling permit, then that permitting is kind of more time consuming. In an area like Ayelen, we're not doing drilling currently in Ayelen. There, we're prioritizing putting together the technical studies and environmental studies for the exploitation phase, a starter project to open up that area. And then after that permit comes through, you've got a much freer hand in terms of exploration. So it really depends on the area. In respect of Bonita, we announced recently we've got regulatory approval in place for a second rig. We haven't given a guide on what the 26 program will be because we want to make sure when we give that guide that we've got the full information. And so, obviously we've done a lot of mapping and sampling work. We've now done a good body of we've got access to a good body of drilling information as well. The key that we're waiting for there to really give us a view of what the broader potential in that area would be is the geophysics. So there's been no geophysics in the Bonita area previously. As I mentioned, aside from what's an outcrop along the ridgeline, most of that area, most of the potential, I think, is going to be underneath cover. Geophysics are really the key to painting that picture. These structures will light up with the geophysical survey. Once we've got all of that information together and we can look at the big picture, then we can figure out what our targeting needs to be, how many rigs we need, where those rigs are going, where the platforms are going. And then we'll be able to, figure out what kind of permitting and timeline is required, and then what the sequence of rig additions will be, and then the budget, of course, and we'll put that out to the market. I'm sure that'll come, if not by the end of the year, then early next year. But it's a bit premature for me to be giving people numbers, on what that guide is going to be at this stage.
So with like an IP survey or a ground-based MT survey, is there a lot of permitting involved with that, or is it fairly straightforward?
No, that's pretty straightforward. We want to be diligent to make sure that that we've done the socialization piece that's important before we go flying these geophysical surveys. But that's pretty straightforward. Right now, basically, we've flown the immediate area around Bonita that we've been drilling. Okay, and so those results are obviously, there's some processing that's required, and then interpretation, and then kind of cleanup before we present those to the market. So that'll be coming, within the next month or two. And then basically from there, we want to step out into the area that's between Bonita. So look, we've got these fantastic drill results right at surface at Bonita. You've got this incredibly high grade resource on the Ayelen vein to the northeast of that. There's 10 kilometers between the two that hasn't been systematically explored because it's underneath cover. Now we know that there's potential there, or we believe that there's potential there. There's strong indication from the geochem, and there's every reason geologically to expect that you're going to have structures there that are going to be mineralized in host veins. But we've got to get in there with the geophysics, and more sampling to be able to really define those targets before we get in with the permitting, and then actually go and drill those targets. So you've got a stretch of basically 10 kilometers of untested potential between Bonita and Ayelen, which will be the next area that we're trying to cover with geophysics. And then from there, we'll go to Cerro Colorado. And Cerro Colorado basically lines up, on trend, with the extension of those Ayelen veins. So that'll be the next priority area to get in there and start flying geophysics. But eventually, we're not going to stop flying geophysics. Eventually, we're just going to cover the entire property package with geophysics. And this is
that's what I was getting at. That's what I wanted to hear you say. Okay, good.
Oh, absolutely. Oh, look, listen. This is an absolute. It sounds silly when you try and explain this to people about, in the mining sector, talking about technological breakthroughs. But for this property, it's absolutely true. This is at, the elevation here is anywhere up to almost 5,000 meters elevation. Okay, and you're in rugged topography. The Ayelen vein, for example, is outcropping at about 4,600 meters elevation. Okay, and between the elevation and the rugged topography, in the history of this property, you've had no airborne geophysics. Basically impossible. You've got small areas where you have ground geophysics around Cerro Colorado, for example, but most of the property has not seen geophysics, and it's only now under this company, in this cycle, where in our sector we're able to take advantage of this. It's basically commercially available over-the-counter drone technology, and mount geophysical equipment on that, and then fly these incredibly tight contours to get this high resolution geophysical imagery back that we can then use for targeting with our other data sets. And this is absolute for a property like this and other properties at high elevation that are underneath cover. This is an absolute game changer. So we're very excited about it.
Very good. So 3 more things I'd like to cover before we wrap up. So social license. A lot of companies in Latin America talk a big game about social license. What is Highlander actually doing on the social license standpoint? What are the key initiatives the company is spearheading? And tell us a little bit about the Barrick mine that closed down nearby and how that affects your plans.
Yeah, really, you touched on one of the key pieces to understand in terms of the context here. You know, and so Barrick's Pierina operation was producing in its best years more than 500,000 ounces a year of gold at very low cost. It was a phenomenal mine when it was operating, and so it provided essentially 100% or more than 100% employment in the entire region, encompassing our project as well. And not only that, a whole bunch of community development work and funding, and business through local supply chains, and basically the economy was flush with the benefits that come off a large and robust mining operation like that. Okay, and that mine basically transitioned to the beginning of kind of closure almost a decade ago now. And the final closure, I think will take place for that asset next year. And so between that period of operations and now, you've got an absolute sea change in terms of the local economies. And whether you're looking at just like raw economic activity, whether you're looking at employment, whether you're looking at kind of infrastructure development initiatives, or whatever social outcomes, it's an absolute sea change. And that sea change creates the opening for a new project. Basically, one of the key elements of our community social relations program is employment. And so we want to have eventually full employment, within our communities supporting our project. And that's where we got to. A lot of this comes from a lot of this experience. We've developed a niche in working on community context projects within the Augusta Group. A lot of that experience comes from Solaris Resources. So if you think about Solaris Resources, was basically taking an early stage, or let's call it post-discovery, very early stage from an exploration standpoint, copper project that had world-class potential, so true tier one potential. And then, and it'd be, when we got going on that project, I joined Solaris in 2019. It had sat dormant for 15 years plus at that point. And then basically resuscitating the project by establishing or rekindling a relationship with the communities, and then formalizing that in community agreements to have a social license for the project, or the beginning of a social license, and then building that up, with really robust broadband community programs over a period of years, to the point that you have a really robust social license, which is what Solaris enjoys today. Okay, so over $200 million of investment into the project, a lot of it going into infrastructure development and community development programs, and working with local businesses, and maximizing the economic impact through local supply chains, working with the local government, is what gets you that solid social license, where you've got absolute dependency of the communities on the project. And we monitored that in real time. So the performance of all of these initiatives and the spending that we were doing, we monitored, in real time. So there was, when we got that, what I would say is a well-developed social license, that was a 3-year effort on Solaris. We would never pull below 90% acceptance of the project within the communities. And you can obviously, you never get to 100, because there's always a gripe, but we would never pull below 90%. And that is what is a rock solid social license. And and they've taken it further to now convert what were at the start of that process critics of the project to become supporters of the project. And so it extends beyond the community context to then you're taking in the whole region, and what were parties that were nominally kind of opposed to mining development in their territory. Okay, and so that's an example over a 5-year period with a lot of investment, how you can go from a project that didn't have social license to a truly robust social license. And then what the community, I just described it as, with shorthand of broadband community programs. It's basically, it starts with capacity building, okay? Because the idea is that you want the community to be working on the project, so it's their project, instead of bringing in outside contractors to work on the project with the community's blessing. Okay, and so capacity building, that's the skill and safety training, bringing, and then deploying, so when you get those work crews established, deploying them on the tasks of the project. So even in specialized tasks, like we were doing road rehabilitation in Q1 and Q2, you can easily bring in a contractor from Juarez or within the region to do that work. And for some of the equipment, you do need to bring in a contractor, but we want the work crews to be from the community. And so you need those contractors to buy in to this concept to be able to work on the project. So it starts with kind of employment, and that's something that you scale up over time. You want to get to an endpoint of full employment within the communities. But then it's all the basic building blocks of community development. So that's putting in place infrastructure like roads that they need to be able to be connected to the rest of the economy, shall provide a sustainable benefit after the life of the project. It's putting in things like, community buildings that they can then use for their community meetings. When you bring in, eventually teachers and medical services, dental services, and so on, that there are buildings to support that. Eventually, we've got partial communication in terms of the services that we provide. Eventually, you want to have satellite Wi-Fi. You want to have electrification of the site. You want to have water solutions in place. You want to have, scholarship programs. So it's broadband. It all encompassing, and you build it up over time. As the project advances and the funding comes available, you want to be building up those programs. And then it's not just what you do as a company, but it's also about working with third parties. So bringing in NGOs that can be helpful. We're working with an NGO called Mission Waskaron, which has, a really well-developed relationship with the communities in the region, with the church, with local government, and they were able to come in and supplement our efforts. And even with the Lundin Foundation, our key outside shareholder strategic relationship is with the Lundin family, and then being able to engage with the Lundin Foundation, which has well-developed expertise in community development programs, and just get a second set of eyes and advice from them on the efforts that we're undertaking is another thing that's incredibly helpful. But this is right at the core of what we do. It's a major area of focus and investment for us, and it's some of the best investment that you could make in a community context project in terms of, the benefit that you get in mitigating risk.
Very good. And then final question, Daniel, kind of a two-parter. So share structure and valuation. How did Highlander manage to, enroll 3 billionaires shareholders? That's not something I've seen very often in a junior mining company, maybe ever. I think it's usually 2 billionaires is kind of where it tops out, but you managed to attract 3 billionaires. And just, can you just walk us through the share structure and sort of the valuation opportunity? Because I think some investors might look at the Highlander market cap and the share price. Some people focus on share price, and they're used to looking at 10-cent and 20-cent stocks, and they see a $4 stock, and they're like, "Oh, that's expensive." So just tell us, what's the valuation opportunity and the upside you see here?
Yeah, absolutely. Well, look, I mean, buying penny stocks and drill hole stories and trading around, news releases and that kind of thing. I totally understand that. I love doing that myself. That's not what this company's about. It's not what we're, offering investors here. There's a long-term view, and by long-term, I mean it's basically a 3-year proposition to advance. If you just look at the kind of the existing resource and forget about the growth for a moment, but just the existing resource, if you think about, what the advancement of that to first phase production would look like, and we're looking at this, and the opportunity as being, in its first phase, a project that permitted under the small scale permitting regime that you have in Peru. So it's a 2-tier permitting regime. Small scale permitting, you're allowed up to 350 tons a day as a base rate. and then overage to 400 tons per day with a more recent change that kind of came through. So if you think about this asset, these kinds of grades, 350 tons per day, kind of recoveries that you would generate here, which are excellent, you're talking about a project that at, spot prices would do well over $400 million of annual EBITDA. Okay. So if you think about the current market cap of the company is inside of 1 turn of what that forward EBITDA is. Okay. And this is within a sector that on next year's numbers, so we're comparing, let's say 3-year forward numbers against, next year's numbers, not quite apples to apples, just want to make sure people understand that. This is a sector though that trades at, north of 10 times EBITDA. Okay. So if you think about what even just the first phase of this looks like over a 3-year timeline, if we're successful on our strategy, we're thinking that looks like a 10 times opportunity for shareholders. Okay. And then obviously, we talked about what the growth opportunity is. It's an immense growth opportunity that is also going to play out over a period of years. This is not something where we want to be pitching, to people, playing the story from, drill hole news release to the next news release or anything like that. That's quite the opposite of what we want to have reflected in our share structure. We're exclusively focused on fundamental investors who understand the sector, understand the opportunity, and are aligned with us for the long term, for that upside opportunity, but then also understanding the context of the risk proposition. Okay. And so if you look at our share structure, you mentioned 3 billionaires, so Richard Warke, our chair, would be the biggest shareholder among them. He's something who, he's an individual who, specializes in investing in size in opportunities that have that 10 times or more growth potential over the long term. Okay, so that is what he does. That's the only thing that he does. So he's fully aligned there. The Lundin family, we talked about how they got involved. They're absolutely, they're probably the most, well, not probably, they would be the most successful long-term, fundamentally driven investors, in the mining sector of the moment. And so they're aligned with us. And then Eric Sprott, obviously Eric Sprott is a silver bull. I think it's probably, there's no way of overstating how bullish he is on silver. And, and he loves high grade and he loves growth. And so I think it's an easy one for him to get excited about as well.
All right, very good. Thank you for the conversation, Daniel, and the introduction to Highlander Silver. And I look forward to having more conversations in the future. Maybe we can do this every 2 or 3 months.
Absolutely. Happy to do it.
All right. Cheers. Thank you.